So, good afternoon, good evening, or good morning to everyone connecting from around the world. Thank you all for joining us for this conversation. The conversation we're having today is on Portugal, Nigeria, building structured pathways into the Portuguese real estate market. My name is Shegun Fakende. I'm the senior partner at AppsWave, a global capital structuring firm focused on strategically raising capital, allocating and managing high network individuals' wealth in the Portuguese real estate market. Over the past few months, we have been publishing a series exploring the Portuguese and Nigerian investment corridor. The goal of that series is very simple. It was very simple to move the conversations beyond marketing narratives into serious discussions around capital deployment, cross-border structuring, legal frameworks, tax nuances, and long-term strategy. Portugal has emerged as one of the most stable and transparent property markets in Europe, strongly supported by legal frameworks, institutional grade development, and increasing investment participation in Portugal. At the same time, Nigerian investors and globally active African capital allocators are increasingly looking for structured international diversification opportunities. However, cross-border real estate investing is really just about asset itself. It's about understanding the legal environment, structuring capital correctly, assessing yield versus risk, timely entry relative to microeconomic cycles, and building the right partnership. And this is precisely why we're having this conversation this afternoon. And today, we are being joined by three distinguished industry professionals operating directly within the Portuguese real estate ecosystem. They will share with us practical insights from development, legal, tax, and cross-border structuring perspective. Thank you all for joining us, George, Philippa, and Fernanda. So to introduce our first panelist is George Fosenka. George is a Portuguese entrepreneur and real estate investor with over 3 decades of experience across hospitality, residential development, and senior living. As founder of BF Capital, he has led and structured large-scale projects across Lisbon, Cascais, Algarve, and Oeiras. His strategic expertise includes structuring institutional grade platforms, GPLP partnership models, and cross-border capital frameworks. George's work spans luxury residential communities and hotel development designed to serve Portugal's growing demographic. He understands how global capital interacts with Portuguese property markets. And in our conversation this afternoon, his expertise will be uniquely advantageous for those exploring GPLP partnership models and long-term asset value creation strategies. George, it's a great privilege to have you with us this afternoon. Thank you for joining us.
Thank you. What a beautiful introduction. You got to send me that. I got to use it more often. Great to be here.
Thank you. Our second panelist is Filipa Gomes Teixeira. Filipa is the founder of F Legal and a high regarded Lisbon-based tax and private client lawyer. With extensive experience advising high network individuals, families, and entrepreneurs, she specializes in Portuguese and cross-border tax matters, real estate investments, and wealth structuring. Our work focuses on helping international clients navigate complex relocation, investment migration, and succession plan considerations, essential for entering the Portuguese market. However, having previously advised at Big Four and top international law firms, Philippa plays a critical role in ensuring that international private wealth is properly organized, protected, and aligned with the latest legal and tax-aware frameworks. Philippa's insight today will particularly be valuable for investors seeking clarity around legal structures, taxation, long-term asset protection strategies. Philippa, welcome and thank you for joining us this afternoon.
Thank you, Segun, for this lovely introduction. I'm very happy
Thank
to
you.
be here with you and my fellow panelists.
And our third and final panelist, Fernanda Cobrosli Mamed Coelho. Fernanda brings extensive expertise in cross-border structuring, international investor advisory, and financial strategy within the Portuguese real estate ecosystem. Our works focus on helping international investors structure their participation in the Portuguese real estate efficiently, taking into account capital flow, financial planning, and long-term portfolio strategy. Fernanda's perspective is especially valuable when discussing how international investors, including Nigerian HNIs, can approach the Portuguese market intelligently and sustainably. She has worked closely with global investors and understand the strategic considerations involved with capital moves across jurisdictions. Fernanda, it's great to have you with us this afternoon. Thank you for joining us.
Thank you so much, Shagun, for the great invitation and the lovely introduction. Happy to be here.
Thank you. So we go right into it. As we dive into the conversations right about now, please prepare your questions and send them via the chat for panelists to address during the Q&A session. Off with off-market performance. So George, to set the stage for everyone joining us this afternoon, could you share your perspective with us on the Portuguese real estate market, how it has performed over the past few years, looking particularly across residential developments and income generating assets? George, we can't hear you. You're muted.
Muted.
I was listening. Anyways, well, a pleasure to be here with you. So let's think about this, okay? Over the past few years, Portuguese real estate market has actually shown something quite very interesting: resilience. Residential has stayed strong, mainly because we still have a structural shortage of housing. For many years, Portugal simply didn't build enough homes. So even when the demand fluctuates, the lack of supply keeps the market relatively firm. And I don't think it's going to change in the next little while because of the different projects that we see are coming up. In development, the environment has become more selective. A few years ago, almost any project could work, but today execution matters much more. Construction costs, planning timelines, and capital discipline are much more important than before, no? And when we look at income producing assets, which is what our group likes to do, offices, logistic, retail, senior residences, hotels, the big shift is that Portugal has become much more institutional. International capital is now very comfortable here. The market is smaller than Spain or Germany, of course, but investors see it as a stable, transparent, and part of the Eurozone. Okay, so overall, I would say Portugal has evolved from being a lifestyle market into a much more serious investment market. And as you know, you live here. Portugal is a little paradise. So I heard of Switzerland is nice, and I heard of Luxembourg is nice, but and we've seen the economic growth that Ireland had, but I believe Portugal can be up there in the top three without a problem. Our beautiful people, our weather, it's just I think it's got an amazing future.
Thank you, George. Thank you for that perspective. I was hoping you share something. I was hoping you're going to mention about the food as well. Good food in Portugal, actually. Very
Well,
good.
the food in Nigeria is also very good, but yeah,
Of
Portugal is
course,
great.
of course, of course. Thank you for sharing that with us. So,
Yeah.
Fernanda, how has the European Central Bank interest rate cycle impacted real estate investment strategies? And how should international investors think about positioning themselves during this phase?
Thank you for the question, Shugan. Yeah, actually, we have to look at this question on a broader perspective. We have to remind that Euribor went from negative levels to close to 4% as an annual interest rate. So, which is something that for sure impacts the real estate market, not only in Portugal, but in the European zone overall. So basically, it has a central role in the increasing the financial costs. And obviously, when we're talking about financial costs here, we definitely cannot oversize the impact on the mortgage rates. So basically, what we saw is that the investors and people who were in the real estate marketing leveraging suffered a higher impact. But the ones that global investors that we are on a daily basis dealing with are more central to more equity and less leverage. So here, for sure, even though we still have a small market, but as George said, a very resilient one. And so I believe we also have some opportunity for global investors to continue to navigate through the real estate market here in Portugal.
That was actually very interesting. I'm glad that you mentioned the market resilience, even with the ECB rate cycles. I'm glad you mentioned that. I've seen that a lot of time when ECB rates shoots up or maybe fluctuates in some cases. That is even when I see a lot of investors, trooping in with a huge capital into the Portuguese real estate market. So thank you for sharing that with us on that from your perspective. Thank you so much. So George, I'm going to speaking with you right now. So from a developer and investor perspective, what are the typical yield benchmarks investors can expect across different assets? I mean, like I was asking you earlier, around residential development projects and stabilized income assets. I think you're muted, George. Okay.
Yeah. Well, they're a little bit all over the place, but let me see the research I looked at. I think it's important to separate two things that people sometimes mix up: development returns and stabilized yields. All right. If we look at stabilized assets, the market today is roughly in this range. Prime retail is the best streets in Lisbon, somewhere around 4 to 4.75. We're talking major high-end streets like Avenida Liberdade. Offices tend to be closer to 5 to 6%, depending on the location. Logistics is in a similar range, and shopping centers usually trade a bit higher, somewhere around 6 to 7%, depending on the asset. Residential is a bit different. Prime residential yields are actually higher because people are not buying them purely for yield. They're buying for long-term capital preservation, lifestyle, and scarcity. And as I mentioned before, there's a big demand for it. I mean, projects today in real estate, as soon as they hit the market, they're sold very quickly. For development projects, of course, investors expect higher returns because they're taking execution risk, planning risk, construction risk, leasing risk. That's why it's important to, partner with what we call boots on the ground, with someone locally that knows their way around, the different feels that we have to do to get a project off the ground. So the key points is that investors should look at the total return profile rather than just a headline for yield. It depends on what you're looking for.
Yeah, sounds good to look at the total returns profile. I like that. Sounds very good. As against just looking at the headlines, very important. Before I get to you, Felipa, I think it's worthy of note to speak to our viewers, tell them how sorry we are for the technical glitch that we had before we started this conversation. So we're super sorry. We had a little bit of glitch. And so I'm just going to say again, I have George with me, I have Fernanda, and I have Felipa with us having this conversation around Portugal, Nigeria, building structured pathways into the Portuguese real estate market. So, Felipa, one of the biggest questions international investors ask is around legal security. One of the very big questions I have with a lot of this international investors, and they want to understand, security. So the question I'm going to ask you: could you explain to us how Portugal's legal system could protect property investors, and what structure are typically, being used?
Sure. Thank you for your question, Sigun. From a legal perspective, Portugal offers a very high level of security for real estate investment, largely due to a very transparent legal framework and a centralized registration system. Because we have a Portuguese land registry, which is Registro Predial, that provides reliable public information regarding ownership and encumbrances to the properties, such as mortgages. And once ownership is registered, the property right is legally protected and enforceable. So that's one big thing. Another one is the wide use of a promissory purchase agreement, which means that in practice, property acquisitions are usually done in two stages. First, there is the signature of a promissory purchase agreement, which establishes the main key terms of the transaction, the price, and legally binds both parties to complete the sale. At that stage, at the promissory signing, the buyer typically pays a deposit, usually around 10% of the final purchase price. And then if the buyer fails to comply with the conditions set out in a promissory purchase agreement, the seller may retain the deposit. But if it's the seller that fails to perform, the buyer is generally entitled to receive double the amount of the deposit. So this is a mechanism that creates a strong contractual incentive for both parties to honor the transaction, and significantly increases legal certainty for investors. So this is the first stage. Then the second and final stage is the actual deed of purchase of the property, at which point ownership is formally transferred and registered. I believe you also asked about the typical structure of ownership that is used. And with that, we enter into some tax considerations, because it's one of the main tax considerations is the actual structure of ownership itself, meaning to own directly as an individual or through a company. Okay, so the direct ownership by individuals is more common for residential investments or lifestyle relocation. The ownership through a company is more often used for development projects or larger investment portfolios. So it depends on the goal of the investment itself.
Thank you, Felipa. Thank you for even touching on tax. I was just going to ask you about tax. Thank you for touching on that, which actually leads me to the next question that I have for you. And the question is, so from a tax perspective, which is another area of your expertise, what you do for international clients, all right? So from a tax perspective, could you tell us what are some of the key considerations international investors should be aware of before entering the Portuguese real estate market? What are the key considerations?
Okay. So After a legal due diligence of the property's documentation, the register, the register in the land register and in the with the tax authorities, the main decision is, as I already mentioned, to buy through directly an individual directly, or using a company, incorporate a company in Portugal, or through a already incorporated company abroad. And then, depending on whether the company, the property is held directly or through a company, there are mainly three moments that we have to consider tax-wise: the taxes on acquisition, the taxes on holding the property, and the taxes on exit, meaning when the person or the company decides to sell the property. So the on the acquisition moment, it mainly triggers two taxes. It's property transfer tax, which is EMT, and is calculated based on the purchase price or the tax cadastral value of the property, and the maximum rate. It's a progressive. The rates are progressive, and the maximum rate is 7.5%. Okay, so there is a higher rate that may apply in specific situations, which is for acquisitions involving entities located in blacklisted jurisdictions. In that case, the tax rate is 10%. But Nigeria is not blacklisted by Portugal, which is a very important consideration to add to this discussion. In addition to property transfer tax, there is always stamp duty to pay, which is generally charged at 0.8% of the acquisition value. Okay, so overall, there is more or less a maximum rate of 8% on the purchase of the property, and this is regardless of being held directly, being purchased directly, or being purchased through a company. Okay, both of these taxes apply and the rates are the same. Okay, then after the purchase of the property, there is naturally the holding period of the property, and during the holding period of the property, the owner must pay municipal property tax, which is paid annually at 0.3 or 0.45% on the tax cadastral value of the property. Usually, the tax cadastral value of the property is lower than the market price of the property. So it's not a very, very high tax on holding. There is an additional to the municipal property tax that may apply to properties when the overall value of the properties held are higher than 600,000 euros. So there are also progressive rates for this. It's 0.7 rate for properties exceeding 600,000 euros, 1% for properties above 1 million, 1.5% for properties above 2 million. Okay, and this is where the differences start to arise, because the rates that I've just spoken about are for individuals. For company, this additional to the municipal property tax applies at a 0.4% rate of the value of the properties, the aggregated value of the properties. So it's slightly lower than for individuals. Okay. Then there is also, during the holding period of the property, if the property generates income, it will be either subject to personal income tax if held directly, or corporate income tax if held through a company. Okay, we are talking about rental income mainly. It can also generate self-employment income if there is some sort of lodging activity associated with the property. And for passive rental income for residential properties, the rate is 25%. For commercial properties, 28%. If we are talking about self-employment income for non-resident taxpayers, the rate is also 25%. If we are talking about resident taxpayers, the progressive rates apply, and the progressive rates are quite high. They go as high as 48% plus a 5% solidarity surcharge. Okay, so this is the least desirable scenario. If we are talking about a property held by a company, the all income generated is taxed under corporate income tax. The current corporate income tax is 19%, and it will be gradually lowered in the next years until it's set at 17% in 2028. So the taxation under corporate income tax is slightly lower than under personal income tax. Okay. At last, when it comes to divestment, to an eventual exit, an eventual sale of the property, it also depends on whether the company is held directly or through a company. Okay, so if the company, if the property is held directly and is sold, the taxation is the same for both residents and non-residents. Only 50% of the capital gain is considered taxable, and the capital gain is determined by the disposal value minus the acquisition value, updated with money devaluation coefficients if the property has been bought more than 24 months before the sale, and then any expenses related to the purchase and the sale, lawyer fees, notary fees, taxes paid on acquisition, such as municipal property tax and stamp duty, and also any construction works and improvements made to the property in the previous 12 years to the sale that are duly supported by invoices. Okay, so that's the capital gain. That's only taxed at 50% of that value, and then the progressive rates apply regardless of the person being a resident or a non-resident. For corporate income tax purposes, if the property is held by a company, the gain is determined more or less in the same way, and it's taxed at 100% of its value. There is no relief, but then the rates are lower. Okay, it's, as I mentioned, 19% for 2026, 18% next year, and 17% in 2028. Okay, so this is the overall life of the property tax-wise.
Wow, Philippa, thank you for that combination of legal framework with an in-depth tax structure. Thank you so much for that. So, I mean, talking about legal framework and also taxation, it's always very important to talk about the cross-border structuring. How does this, work, for an international investor, for instance? So, Fernanda, I have a question for you. So, when international investors, particularly from emerging markets, look at Portugal, what are the most common structural mistakes that they get into or they make? What are the most structural mistakes that they make?
Um, when we're talking about international investors and mainly from the emerging markets, it's quite common for us to deal with what Philippa said before, the indirect holding of the property, which means setting up a structure to hold the property. And from a tax and legal standpoint, the common mistakes are basically ignoring the framework that the Portuguese market will interact with their own foreign jurisdictions. As said, investors must bear in mind the three potential perspectives, I would say. One, where the investor is tax-based, which means the person itself, where it's located, and by the end of the road, we're gonna have to analyze what is the impact and how the money will flow from the personal perspective to the structure. The second case would be where is the the already existing, if any, the structure is based. So basically, there are several international investors that come along that have already set structures abroad, let's say in Dubai, in London. I don't know, there's several options that usually are tax friendly to their local jurisdictions. And we need to analyze from a legal and tax perspective, how is the interaction of this jurisdiction to our market. And by the end, we also have, obviously, where's the asset located. So from an international tax standpoint, what we usually see is that investors sometimes ignore the potential tax impacts on international investors due to the interaction of these jurisdictions. So, as Filipa just mentioned, we do have a blacklist jurisdiction list, and Portugal aggravates the tax burden for certain places. So basically, if certain jurisdiction might be tax friendly to you when you're in your homeland, but not necessarily friendly here in Portugal. So we always advise people to search for legal and tax assistance privately to the property acquisition. And I would say that another now legal and also is tax common mistake that investors do here is to the poor management of the documentation relation to tax deductible expenses. So when we're talking about selling the real estate asset, we always have tax deductible expenses that must be taken into consideration to minimize the capital gains and necessarily to pay less taxes, let's say. And so we do have some requirements that we always advise investors to keep everything, to have also a due diligence after the property acquisition. So you have a tax impact also on the property selling. And basically, this is something that we commonly advise whenever we have local investors and foreign investors coming over. There are some certain requirements that must not be forgotten, sorry. And for sure, I would say these are the most common, but also avoidable mistakes.
Yeah, thank you, Fernanda, for sharing that. I mean, the common mistakes, and I see that a lot actually. I see that a lot around. People get to jump into. I mean, I would say Portuguese real estate market, but generally, people just get to jump into market, just with the headlines, like George earlier mentioned, without having to understand the local nuances and even working with local partners on ground. And like we said, I mean, cross-border real estate investing is really just about asset itself. There are a lot of structures that needs to be understood. And for you to understand these structures, you definitely need to work with partners locally here in Portugal. So looking ahead, George, what are you seeing in terms of the development pipeline in Portugal? And where do you see most of the compelling opportunities emerging in Portugal? Your mic is muted.
First of all, let me say that the information Fernando and Felipe are giving, even I'm learning. I think it's, it seems to be a lot of bureaucracy, but if you're dealing with the right people, they keep it simple. KISS principle, keep it simple. And it's so important to deal with the right people. Well, I'm excited about the development pipeline here. What I see going forward is a market where opportunity is still very strong, but much more focused. The biggest opportunity continues to be in the sectors where Portugal has clear demand, but not enough modern products. Okay, housing is obviously one of them. The supply gap is real, and they won't disappear overnight. I mean, there's a huge demand for residential of all types. From startups to high end. Even I was with someone that was here from the United States, and they wanted to buy a big property in Lisbon, and there's not a big properties. I talked to my friends, my son's friends, and they say I can't get an apartment, even a starter apartment. So the demand is huge. Another area I think is very interesting is the senior living, and Segun, you have visited one of our buildings. Portugal demographics are changing, and the country still has very little institutional senior housing compared to other European markets. For example, there was a study done, and we need another 20,000 beds in Portugal for senior living. Our population is the third oldest in the world per capita. I believe it's Japan, Italy, and then Portugal. So the seniors, I believe this is a huge development for us. Hospitality is another sector where Portugal continues to perform very well as tourism remains strong and the country has become very attractive to international residents. We have a lot of people that are making Portugal their home. And I don't know if Felipe or, have had, or Segun, if people have been asking, but this situation, what's happening in the Middle East, a lot of people are thinking about Portugal because we're a little paradise in the corner of Western Europe, and just very safe. So I think the opportunity is not about building more of everything. It's about building the right product in the right location. So it all depends on what you're looking for, But we're very excited about the development pipeline here.
Thank you for talking about that. Yeah, like you rightly said, there is a serious spike even in demand right now. I
No
mean, owing
areas.
to the war in Middle East right now, there's a serious spike, and that makes the Portuguese real estate market big, huge, and a very I would say juicy opportunity and timely one, even at that. I don't know, Fernanda, do you want to contribute to this, or Philippa, you want to say something about this before I move?
It is as George said, we are a little garden by the sea, a little paradise, and we have had a lot of contacts from people looking specifically for that piece.
Yeah, true,
Yeah,
true that. Yeah, true.
Portugal is a
Peace,
little
peace
paradise,
is
a little
everybody's looking
paradise.
for peace. George, you're saying
And
something?
Portugal, yeah, and Portugal has never been involved in any wars. World War One, that was
At
it,
least
and then after
directly.
that, we're very peaceful. Let's make love, not war. So you guys fight it out. We'll help whatever you want, but you know, we stay out of it. So I think that's peace of mind.
I don't know if that's a choice, but it's just about our size. We just tag along with the big players and and dump down.
We are clever.
I think both perspectives are actually right. Trust me, they are right. Because even the small population, a lot of time, we just want to go to war for just no reason, just want to flex your muscles and blaze those guns that you have them in your arsenal, So yeah. So again, for everyone watching us, if you have questions, please send them in via chat so that we could take them, tackle them during the Q&A session. All right. Joe, I'm still staying with you on this one. So for international investors looking at Portugal for the first time, where do you believe the most strategic entry point currently exists in the market?
Like I said, there's, I like very much income producing real estate. So senior residences, hotels, logistic parks, and student housing. I think the best advice I can give is to partner up with someone local. You know, I've had the chance of working in different countries, and sometimes I try to do things on my own, and and it didn't work out. But if you work with someone locally and create the right network, like what you're doing, Sagun, and the panel that we have here. If you get involved with the right people, it doesn't mean that you have to marry them, but you can listen. And if you think that the information is positive and you can trust, then it's the best way to go. Look for people that are doing what you want to do. You know, this is no time to venture out on your own. And if I would go to Nigeria tomorrow or any other country, first of all, I would look for someone like yourself who's locally, who knows the way around, and to show me what can be done. And that's what you're doing here with this seminar. Which congratulations, you set up the right people. So if the people that are listening, try to find the right partners. And sometimes start small, smaller projects, get to know the lay of the land, and then they can grow together. You can go fast on your own, but long term, it's better to do it with someone that knows the land of the law of the land.
Absolutely, George, absolutely. I mean, when I came to Portugal about 4 years ago now, actually, I got myself plugged in into the real estate space because I've been doing this back in Nigeria for some time, but I like you said, you get into a new country, a new terrain. You need to get involved. You need to get to know the locals who have been playing in the market and the sector for quite some time before ahead of you. And that's what I did. I got plugged in, and I mean, get to know you all, and to understand the local nuances, the tax frameworks, and cross-border structure, and all
Yeah,
that.
yeah.
Yeah, that's the
I had
very
a
best
friend
advice,
that
actually.
I got a friend from London about 6 months ago. He calls me, George, I'm moving to Portugal. I'm sick and tired of England. This is crazy. I'm leaving, and now I have to get a golden visa because now the Brexit. And I said, can you find me a piece of land or an apartment in Albufeira or Setúbal? And I'm like, what? Have you been there? Yeah, yeah, we were on vacation. We liked it, and we spent a couple days in each one. I said, come on, that's not the right way to do it. Come on down, come on down if you want, get an Airbnb for a month in Stubble, get an Airbnb, go live another month in Alfreda,
Yes.
see what it's
Yeah.
like. Okay, get to know the local people, lawyers, accountants, real estate developers. Talk to them, invite them out for a coffee, and then you'll see where you want to live. But if we find you a property and then you get here and you don't like the neighbors, or you don't like the winter there or the summer or whatever, doesn't have your kind of coffee in that area. So I think you really got to get down here and immerse yourself in the culture and in the people. And if you're looking to invest in hotels, then people, I know people, we all know people, and or senior residences. If people want long-term yields, short-term, you can go from short-term 5 to 6% to some risks at 15 to 20% with residential development. But you're doing it with somebody.
Yeah. Yeah. Yeah, collaboration beats it any day, anytime. Tell you, particularly with local partners, it beats any day. It wins anytime, any day,
That's why
anytime.
I got married.
Rightly said, George.
That's why I got
Yeah,
married.
rightly
It's a
said.
lot easier being with somebody than being by yourself.
Yeah, yeah, absolutely,
Uh,
absolutely. Okay, so let's talk for a bit, Fernanda. Let's talk for a bit. So for investors allocating capital internationally, how should Portugal fit within the diversified real estate portfolio strategy?
Let's see. Portugal offers a strategic satellite role in a real estate international portfolio. because as it provides diversification, combining the European exposure with higher yields than the core markets here in Europe. So even though we're still talking about a small market, we cannot ignore that Portugal has been intensively being assessed by local international investors worldwide. And so even though this is a small market, we still have high liquidity. And as we have been previously saying, it has been shown in the interest rates, the pandemics. We had several events here to test the real estate in Portugal, and we still have seen that the yields are still increasing and are still very resistant. So I would say Southern Europe overall is a bigger market as it comes to yield and growth when we are talking about being the center of the world. So basically, when we are talking about international portfolios, we cannot ignore Europe. And as we have seen a lot of complicated issues worldwide, we see that Portugal is still is a Pacific place, has an amazing sun and international and very friendly local people to still be considered a very friendly and safe place for international investment.
Yeah, rightly said. But sorry, I kind of like the Portuguese food. I was expecting to hear something about Leitão, and
We could set another
bacalhau com nata,
webinar just to discuss about the Portuguese food,
Just a webinar for food recommendations. I think that would be a hit.
We could exchange recipes.
Okay, so Philippa, talk to us. For investors focused on capital preservation rather than speculative growth, because we have quite a number of them, can legal and tax structuring support long-term stability?
Oh, well, Segun. For investors focused on capital preservation rather than speculation, and even for those focusing on speculative investments, the starting point is very simple. It's capital preservation always and will always begin with structuring the investment correctly from the outset. So the key question is how to reduce the legal, tax, and structural risks over the entire life of the investment. And in that respect, as we already mentioned and covered during this conversation, Portugal offers several elements that support long-term stability. The first being the legal framework that provides a strong protection of property rights, supported by a reliable land register system and clear contractual mechanisms such as the promissory purchase agreement and deposit structure that we discussed earlier. And all this significantly reduces the transactional uncertainty from these type of investments. Equally important is proper due diligence before acquisition, particularly the verification of the title of the property, the planning permissions that are submitted with the city hall of the location of the property, the licensing status of the property, and all this avoids regulatory risks that can affect the long-term value or the usability of the assets. Then the tax structuring itself, which, as I hope I was clear on that. And tax structuring plays a very important role in protecting long-term value. And investors should carefully assess whether the property should be held directly or through a corporate vehicle. Because this is not always clear, and it depends on the structure of the already owned assets of the investor, whether the intention is to live in the property, to rent the property, to build the property from the ground up. So this decision affects the taxation of the property in all stages and at the moment of exit. There is not people many times clients come to me and ask, okay, if I wanted to incorporate a company to buy this property because someone told me this is better. It's not always better. It really depends on the goal and the long-term goal of the person, of the person at stake. Okay, so when all of this is properly addressed from the outset, the legal certainty, the proper due diligence, and the tax structuring, real estate in Portugal can actually function as an income-generating investment, but also as a stable, very stable, long-term store of value within the European Union, which is always which is a very, very solid legal ground for people to trust in.
Wow, thank you, Philippa. Thank you for sharing that perspective. So we have a question. I have a general question for three of you. I know George is pressed for time to leave, but I need you to please hang in there for just a couple of more minutes, please. But let's take this question. So someone is asking, can a non-resident buy property for lease purposes in Portugal?
Yes.
Yes. I don't know if
Sorry.
maybe I can add something very relevant from that perspective, because it's very important to clarify that one thing that is often misunderstood by international investments. Investing in Portuguese real estate does not require a visa, residency permit, or tax residency in Portugal. So foreign investors can acquire a property in Portugal as non-residents without relocating to the country. If the investor wishes to relocate and live in Portugal, then we have immigration considerations to make, and there are many pathways available, such as the Golden Visa program. This no longer grants a residency permit through the direct purchase of a property, but there is the possibility of invest in investment funds, in research activities, in several different routes. Then there is a D7, which is a passive income visa, which is also very used by high net worth individuals to come live in Portugal. It just requires to show that they have passive income in a very low amount. It's 14 times the minimum wage of annual wage of Portugal, which is around 15,000 euros per year. So dividends or rental income from abroad or a pension are eligible. So there are also these considerations to be made if the person actually wants to relocate to Portugal. But if they want to keep residing wherever they reside, there is no need to initiate any type of immigration procedure.
Thank you, Philippa. Thank you so much for sharing that. George, so I'm going to let you go in a couple of minutes, but I have a general question for three of you, and I would like you to take that first. So talk to us about, Philippa talked about Golden Visa just now. We understand that Golden Visa was taken out. You cannot access Golden Visa by direct property purchase, but there are still programs in the real estate sector where you can still apply for the Golden Visa program. So George, talk to us about Golden Visa, particularly as it relates to the senior living project that is being worked on right now. Please talk to us about it real quick.
Sure. Yeah, the Golden Visa program, you have to invest in a fund that creates jobs. So we have been in the senior residence business for the last 10 years, and we have a fund that can be applied for golden visa with an investment of 500,000 euros. They can invest in the fund, and the fund is specialized in operating senior residences. To date, we have over 300 employees, so it more than fits that category. And we are developing another 500 beds, which would be another 400 employees in the next 3 or 4 years. So, and people that invest in there, they get a stable yield income from their investment. And then the fund buys back their investment in 5 years once they get the residency, if they choose to get the residency or citizenship. I don't know. The government still doesn't know how long it takes now for citizenship. I don't think the laws have come out yet, right, Felipa? So
they have. It's 8 years now.
It's 8 years. Okay, so 8 years from now, you can apply for citizenship, but you can be a resident here or not. You can be here. I think you're required to spend 2 weeks a year, right?
Yes.
Which is an
Yes.
amazing vacation with amazing people, amazing food. And then you don't have to actually live here. And if you do decide to in the future, then you have that choice. And, just agreeing with Fernanda and Felipe said earlier, for international investors entering Portugal for the first time, I usually suggest start small, relatively simple. Golden Visa is a great way to start, okay? And in real estate, because you can invest in real estate without owning the real estate. You own it through the businesses that operate the real estate. And in real estate, you don't make money when you sell, you make money when you buy and when you structure the deal correctly. I see the long beard. I've gone through a lot of different things, and sometimes it's how you buy, and how you buy is how you structure. And sometimes if you don't have the right lawyers and the right accounting, you end up thinking you're buying inexpensively, but at the end of the day, if you don't have the right structure, you end up giving a lot of that back to the government, which you don't need to. I mean, they're very happy with just getting the share that they need to get. So it was great being here with you. I'm really sorry, but I really have to go.
Yeah, it's okay, George.
If anybody wants to get in touch, please share the email. We'll send them a teaser. And and like I said, the right structure. And I believe Fernando and Felipa can steer you in the right direction. And we can show you the right investments also, obviously with Segun as our godfather.
Thank you, Joe. We're actually drawing the curtain right now because of time. So I'm going to ask if you have other questions.
Thank you,
can
guys.
share
Please take care. Felipa, Fernando,
all right, bye, George.
Thank you,
Yeah,
George.
bye,
It
George.
was amazing.
Yeah, bye, George. So if you have questions, you could send your questions to us via the email that will be showing on your screen. And of course, we're going to pass it on to our partners, F Legal and BF Group. Okay, so I just want to say thank you as we draw the curtain right now on this conversation. I want to say thank you to our panelists. Of course, George, we just stepped out. Felipa, thank you so very much. Fernanda, thank you so much for sharing with us such a thoughtful and practical insight today. We are so delighted to have you all on this discussion. So cross-border real estate investment is simply not about buying properties, just like we've said. I think about the third time we're talking about it. It's about understanding the markets, building trusted partnership, like George has, emphasized over and over again, structuring capital intelligently and positioning investments for long-term stability. And that is what our partners, that's what they do. Felipa, Fernanda, F Legal, that's what they do, helping to structure and position our investments for long-term stability. As we know, Portugal offers a compelling real estate environment, and when approached appropriately, the right way with the right professionals and local partners, it becomes a global phenomenon if you do it well. And as we've explored today, navigating the Portuguese real estate market requires more than just the capital. We can say this again and again. It requires more than just a capital. It requires a sophisticated approach to wealth management, strategic allocation. And this is precisely where we step in. This is where we step in as Outway, where we step in as F Legal, where we step in as BF Capital. Okay, so I want to say a very big thank you to everyone joining us today. Thank you for your time. We're going to be expecting your questions. We're super sorry that trying to make this short as much as possible for us to run back to the things that we were doing, the clients that we need to quickly attend to. So I want to say thank you to all for joining us today. We are going to keep and continue having this conversation again, have some more webinars, and also answer your questions once we get them via our email on your screen. We send them to our partners, and we get to respond to your queries. Okay, so thank you again, Fernanda. Thank you, Philippa. It's a great pleasure to have you both. And in absentia, I say thank you to George. Thank you, everyone. Do have a wonderful day. Bye.
Thank
Thank you,
you so
Sigurd.
much,
It was a
Sugun.
pleasure.
Yeah, bye.
Pleasure. Thank you. Bye bye.